Okay, hello everyone. Welcome to Credit Report Scores and all that fun stuff. I'm Melissa. I'm from the Business Insight Center at the Central Library of Rochester in Monroe County. Thank you so much for joining us today. Please remember to mute your microphones and enter any questions into the chat. We'll answer the questions at the end of each section of the presentation. This presentation is being recorded and will be uploaded to YouTube. And if you're registered for the event, you'll receive an email with the presentation slides. Just a reminder, all services of the Business Insight Center and the Carlson Center for Intellectual Property are free and available by appointment only. I'd like to now introduce you to Andrea Colleen from the Consumer Credit Counseling Service of Rochester.
Okay, great. Thank you so much, Melissa. Hi, everyone. Thank you so much for attending today. My name is Andrea Colleen, and I work as an outreach and education coordinator at Consumer Credit Counseling Service. We are very happy to be able to partner with the Central Library today to deliver this virtual workshop to you. Hopefully it is helpful and we can learn some new information to really help you on your endeavor of either growing your business or starting a business when it comes to the topic of personal credit. So we'll go ahead and kind of get started here. So first, let me tell you a little bit about who we are. You may have heard of us before. Hopefully you have, but Consumer Credit Counseling Service has been around since 1970. So we've actually been here in Rochester for about 52 years. And we're very proud to be the only locally based nonprofit credit counseling agency in the Rochester area. So we are in Rochester, but we can really do business anywhere in New York State. So we use the name Rethinking Debt. And we've also acquired a few other smaller agencies throughout the nation or United States as part of our umbrella. So you can see all the different logos at the bottom. But currently, we're the only local nonprofit credit counseling agency here in Rochester. We just want to say thank you so much for attending today and taking the time. We're very happy to partner with Central Library on this topic. And we're here to really support the needs of our community in whatever topic it could be. You can always check out our website. We do a lot of different workshops. We've done a lot in conjunction with the library in the past, just different topics, whether it's credit, budgeting, maintaining, safety when it comes to our personal information. So all that good stuff. So when it comes to our agency, just a few more slides on that. Our focus is our focus is on the financial health of individuals and families, helping those that we serve to achieve financial wellness through the different programs and services we offer. So we offer one-on-one financial counseling services in many different areas, whether it be housing, whether it be building credit, paying off debt, building a budget, and we have since added counseling for small business owners. So that's something that we can offer also. It's more the financial side of things when it comes to their personal credit. We're also a member of the the National Credit National Foundation for Credit Counseling. We are also licensed by the New York State Department of Financial Services, and we're a HUD approved housing counseling agency. And we're also a member of the Better Business Bureau with an A+ rating. So I'll be your presenter today. I am Andrea Colleen, and here's my contact information. We'd be happy to provide a PDF of the presentation as well, if that's helpful to you. So here's what we're going to talk about: personal credit and business, understanding personal credit, building personal credit for business purposes, understanding your score, as well as just a few basics when it comes to business credit. Like I said, our focus is more on the personal side of things, but we do have a few hints and tips and resources to kind of get you started in that direction. And if people do need to get connected to our service because they're trying to maybe improve their credit score, maybe they're trying to pay off some debt, or maybe they're just trying to have better spending patterns that can support that, we are also here to do that, and I can tell you how to get connected. So our first area, so like we said, we're going to try to stop after every topic. I might have to watch my talking time. And the presentation is going to go for just about an hour to make sure that we can answer your questions. So when it comes to personal credit and business, commercial lenders may look at both your business and personal credit score before they approve an application. So that's something to kind of think about. So if we're first starting our endeavor, of course, you're not going to have the business credit open at this point, but poor personal credit can affect approval for loans in the future when it comes to your business or a commercial loan. Some things that they want to see, like if it's a traditional bank or credit union, when they're looking at our personal credit, though it can vary, there could be some, ins and outs of that. They usually look at our credit score of about 640 and higher. So we'll focus on the credit score and how it's even figured or calculated and ways to improve it if we need to in an upcoming section, but this is what they're looking at. For businesses that have been operating for less than a year, the personal credit is the key. So it really depends on the type of business, how long you've been in business and all that, your financial situation. But if we have been in business for less than a year and you're looking to borrow, they're going to look at our personal credit to help determine if they're going to lend us money or not. So that's important to understand that side of things. I guess we don't have to do that. I don't know if anybody else, does anybody have questions on those two slides? It's going to kind of get into a little bit more detail here. So let's talk about personal credit. So when it comes to the topic of personal credit, it can affect our ability to do many different things that we think about. We typically think about like getting a loan, a car loan or a mortgage, a credit card or refinancing. But it can also come to like renting an apartment. When we are renting an apartment, that's something to think about as well. Many landlords or many complexes will look at our credit report, though they're not lending us money. It helps them determine if they're going to allow us to rent the unit or not. Car insurance, or not even just car insurance, different insurances, period. So whether it's homeowners, renters, in many cases, credit can be part of that. It can help us determine the rates that we're going to pay. So, some insurance carriers may look at it more than others, but it is something to think about as well. Some employers pull your credit report. So I don't know if anyone's ever had that experience. Usually for working at a municipality, working for the county or state, a government type position, banking, any type of financial or banking institution is going to look at our credit report as part of the hiring process. So again, it's not for lending purposes, but that's where credit's going to come in handy. Not that they can say, oh, your credit's not good, we're not going to give you the job, but typically if there's federal debts that are delinquent, that can cause someone, especially if they're trying to apply for a federal job, that can kind of get a little bit intertwined. So that's something to kind of be aware of and think about. And then self-employed individuals. It helps self-employed individuals obtain more opportunity for business lending. So of course, that's probably part of the, getting a loan or getting a credit card. But when it comes to owning a business, that personal credit it's important, especially when you're first starting out. And even when you are, on your way and doing well and enjoying your, the work that you're doing, it's important to know the difference between what is my personal credit versus my business credit. And that can get a little confusing at certain times, but hopefully we can shed some light on that. But again, focus is personal credit. So before anyone lends us money, they want to know a few things about us. Think about it in the past. If you've ever applied for a car loan or a credit card or a mortgage, they want to know everything about us, right? They want to know how much money we make, how long we've been working in that particular job, what field we're in. I mean, that can be true for many, many circumstances. How much money we have saved, what it is we're trying to buy, how much we're asking for. So it can usually be characterized under these four components: character, capacity, capital, and collateral. So character is basically the word that's used in the banking industry for how well we've paid debts that we've had in the past. So this is where if someone has delinquencies on their credit report, or they have collection accounts on the credit report, or judgments, and we'll talk about all that in just a few slides, or in a few sections, I should say. That kind of stuff can hold someone back from getting approved for a loan. It doesn't mean you can't get approved for a loan, and there are ways to resolve those and fix those and have a better understanding of those type of things. But that is part of the lending process. They look at our character, just our history of how well we're making payments. The other C here says capacity. Capacity is basically how much money I have. How much money do I make, and how much money do I have to pay out in current debts? How much money do I have to pay out for my current car loan, my credit cards, things like that. Capital would be the amount of money that we have saved, any amount that we have set aside or saved into a banking account. So that's something to think about as well. and collateral. Collateral is what is it that we're trying to purchase? So a banking institution or any kind of financial institution that we're trying to borrow from isn't going to let us borrow more than what the balance is worth, or not the balance, whatever it is we're trying to buy. So the collateral in buying a home would be the house. The collateral it is, buying a car. So if they're selling a car for 8,000 and you go to a bank and you want to borrow 12,000, it's not going to get approved because it's not enough collateral. So that's something to think about too, right? So when it comes to our personal credit, yes, our credit score is important and how well we manage our debts is important. It's usually the first thing that we think about, but people can get denied a loan because it's not affordable for them, compared to their income, or maybe what it is that they're trying to purchase isn't enough. There's not enough collateral there, or maybe they need to have a certain amount of money set aside in savings, and they don't. That's not always typical, but for buying a house, it is. So it's just something to kind of think about. So one thing we would urge to do, excuse me, is to get a copy of our own credit report, right? So whether you've seen one or not, it's definitely like within the past year or so, it's not a bad idea. And we have the 3 credit reporting agencies. So these are the 3 places that create our credit score. So we have Equifax, Experian, and TransUnion. So those are the 3 organizations nationwide that hold our credit information and can actually give us a credit report. If you want to see all 3 for no cost, there's not a score on this though. We're going to talk about score in just a moment, but you can go to annualcreditreport.com. Maybe you've heard of that, maybe you haven't, but you can get all 3 credit reports for no costs. If you've been a victim of fraud, or if you're receiving a public service, you can also receive those for free. Actually, right now until April, you can pull it once a week for free. So that was a provision once the pandemic started that they're allowing for people to do. So annualcreditreport.com, you can get a copy of each one. It's good to do it just for purposes to make sure no one is using our information. Unfortunately, since this pandemic started, there has been a lot more fraudulent activity. There's a lot more online activity. So whether it's somebody applying for your unemployment benefits when you're still working, now fun to have to go through that, or maybe there were situations where a credit card was taken out, or people are purchasing items in your name and you're not catching it. So it's good to look at your credit report to make sure that there's nothing on there that you're not familiar with, let alone just to kind of see where you stand. You can get a credit score through annualcreditreport.com. It's just not free. There's a fee. I want to say it's $8 to $10. I could be off on that, but I know that you can see it. A lot of people like to use the apps on their phone. There's Credit Karma, Credit Wise. It's not an actual FICO score, which I'll explain, but it's still a good start. If you're just curious to see where you stand for your credit score, it's a Vantage score that they give you. That could be an option for you. So it looks like this. So you go here, might be a different picture, but you go to request your free report. So you click there, and then it would bring you here. And then it would bring, it would bring you to this page. So you fill out all your information, and then it will bring you here. So then you select which report you want to pull. You can do 1, 2, 3, whatever you want. And then when you select next, prior to this is an actual credit report. It's going to ask you some questions to confirm your identity. It's going to ask you, sometimes people can't answer them, or they panic because it might say something like, in 2018, it appears you've obtained a mortgage loan. And people start to panic because they're like, I didn't. Then the answer is no. Something as simple as that. I did it once and it asked me to confirm my license plate number. I'm like, oh my, I don't know. It had to go out and run out and see really quick, but sometimes it asks, questions like that, but it's mostly just trying, which I don't know, that was a weird one, but mostly it was trying to, which I think was a no, but mostly it's just trying to confirm information from your credit report to see if, it's really you. So this is what a report looks like. I don't have it broken down in every section, but there's 5 sections. The first section on a credit report is basically your identifying information, your name, your address, maybe it has a current employer on there. The second part of your credit report, usually it's not on this one, but it's called public record. So when it comes to your credit and public record, or finances and public record, that's more if there's ever been a bankruptcy file. Typically within the last 10 years, it would stay on your report. If there was any kind of like lien or judgment that was placed against us, any kind of tax debt, child support debt that's delinquent, that would typically appear there first. And then the biggest part of our credit report would be the credit items. So this is like who we've borrowed money from, who we have paid, who we haven't paid, who we're currently paying. It will reflect the name of the creditor, if it's been sold to another one, which, you know, can sometimes look crazy on a credit report, especially with student loans, the current status of those debts, all that good stuff. If things start going to collections, it may have the different collection agencies on there. It doesn't always. That's why it can get confusing when it comes to that area. People need help with that. You can always reach out to us. We can help you read that. It's basically who we've borrowed from, and they will appear. I'm jumping ahead, but I'll say it here and I'll say it again. Typically the 7 years is about how far back things go. So if I have a mortgage loan, it's always going to appear on my credit report for at least, you know, the time. It's probably going to be there forever, but it'll only really reflect 7 years of your payment history. And then the last section, again, which isn't here, but I will address, is inquiries. Anytime someone pulls your credit report, including yourself, it will show up as an inquiry. So that is an area too to look at. Sorry, let me just turn this off. Of course. That is also an area to check, because if you start seeing people pulling credit report, or, you know, applying for credit or applying for debt, and you know you didn't do it, that can be a trigger of identity theft as well. Sometimes there's promotional inquiries that we can panic about. That might just be someone trying to get some basic information about us to see if they want to market to us. So I wouldn't worry about that, but I would also check those inquiries. So this is the same stuff that a business lender would look at. They're probably going to have a quick system where they can just pull all three and get you like a median credit score, so they can determine where you stand and they can analyze it in a different way. But when we're looking at it, this is what we're seeing. And even though we just have an example of an Experian report, there is also TransUnion and Equifax, and they all look different. They have the same elements, but it could be formatted differently. They might even have different scoring models, which I'll talk about as well. Any questions on that?
No questions currently in the chat.
I see a hand raised.
Type all questions. Well, you look like you're on a phone, so maybe you can't type in the chat. Feel free to turn your mic on and ask.
Are you showing slides? Because I'm not getting those.
Yes, but if I can provide a copy of the slides. I don't know what the best way, if it would be to send it right to the library, or you can always reach out to me, or whatever was best.
If you registered for the event, we'll send the slides to everyone.
Okay, through the email?
Yes.
Okay. Thank you.
Thank you. Yeah, no problem. Okay. All right, so let's talk a little bit about building personal credit, which will lead us to our next section. So once we've looked at our report, it's important to take the steps to work on clearing up any collection issues or judgments. So if maybe that's not an issue for us, maybe it is, but whether it's contacting them, working with the creditors to establish the repayment strategies, it's so unique to each individual. I mean, if a broad strategy that we've taken is to kind of start with the small ones and then work your way up, you know, if as long as it's affordable for you. So thinking about it in that regard, but that's an opportunity too. And I'm not just trying to push our service. We are a nonprofit, but we do have services to help people with that, you know, just like there's resources and whatnot. If people need that one-on-one counseling to really help them get a better hold and understanding on what their credit looks like and what they can do to improve it, we'll definitely, you know, help with that. So how long do things stay there? So I did kind of jump into that in the previous slides, but typically 7 years for late payments. So that's what I said. The payment history typically lasts about 7 years. So if I paid something late by more than 30 days, sometimes 60, it just depends on how they report, but let's just say 30 days. That's the general rule, especially for debts that, you know, like a credit card or a car loan. It will appear on my credit report for a 7-year period. If it was a collection item, so a collection item would mean something that a credit card I didn't pay. That could be a medical bill, that which we're seeing a lot of because they're so easy. There's so many little bills you can get in this. We should probably have a workshop just on that. But collections, that could be an old utility bill. That can be an old library bill. We've seen them plenty of times, you know. So that's typically what a collection item is. We always try to say, let's work on those. Judgments. A judgment could be, I think I mentioned it earlier, but if someone actually sues you for a debt, and it's gone to like a legal, even if you get like if it's an old debt and you get a letter from an attorney that says, you know, you owe us this, that we're collecting on behalf of this organization or this place, it doesn't mean it's automatically gone to a judgment. It means it's gone legal and it will go to a judgment. So a judgment is basically like the next step from collections, and it's an official legal process. You'd receive a summons in the mail. Usually they're taped to the door, they're mailed, or both. So you would know if you had that, but those would also appear in your credit report. And that, you know, that's something that can be worked out. Or a Chapter 13 bankruptcy. A Chapter 13 bankruptcy is a bankruptcy that you would repay some of the debt. So those would appear for 7 years. Chapter 7 bankruptcies, they stay there for about a 10-year period. It's a little confusing, but an inquiry, anytime you apply for credit, that would appear for about a 2-year period. Too many inquiries can knock your credit score down. You've probably heard that. If you pull your own report, that will never knock your score down. If our agency pulls your report, it will not knock your score down either. Okay, so I just wanted to kind of put that out there. Now the student loans, like those government type debts, taxes, things like that, those don't fall under that same 7-year rule. That's a forever rule. So specifically if they're unpaid, even if they're paid, when it comes to student loans and they're current, they never were behind, they're just going to stay on your report, and it's fine. It's not going to hurt you. But it's just something to kind of think about. So establishing credits. So this means that borrowing money, when we're trying to establish credit. So I know everybody's in different ages and stages and focuses and goals and things like that. So I want to try to cover every part of this. I mean, some of us on the line may have established credit and we know our next step, but not everybody does. You know, maybe we are just starting off the process and credit, you know, we don't have that credit. So things we can do to kind of get things started would be to apply for a credit card carefully, right? You can do a workshop. We have a workshop on everything you need to know about credit cards. I don't know if it's on the schedule. It's called Paper or Plastic Avoiding Debt Disaster. That's a good one, just so that you know things to look for. And just a few hints, like things like annual fee, monthly fee, setup fee. Is it a secured card? Is it a regular credit card? You know, either one of those would help you build credit, but it's still important to understand that. Secured cards are a nice way to build credit if you have no credit, or if you have some issues on your credit that you're trying to clear up, because a secured card means you're putting your own money toward it and they're lending you that money in replacement. So that would mean, I'm going to give a really easy example. $300. So I have $300. I go to the bank, I put it in a special account. They then lend me $300 because it's secured at this time. So they have that money on standby, and then I have to just use it and pay it like I would a normal credit card. If I don't pay it, it will hurt my credit. Yeah, because it's like a regular credit card, but then the bank or credit union will have something they can fall back on because they have that money set aside. And usually once you show that, you're able to, you know, make those payments, then that $300 could be freed up again or not. It just depends on the situation. Okay, so secured credit card, a car loan could help, of course, to build credit. That's kind of comes later on, depending on where you're at. So those are the kind of things, credit. So a credit card, like a bank account, doesn't help you build credit, but it's still good to have one because it can help you establish that relationship with that lending agency, especially when it comes to business. So I'll have a section on that as well. Lenders like to see at least 1 year of using credit. So a good year of consistent history some people will think they've applied and got approved and now their credit's where it needs to be and they start, trying to, move on with their ventures. But the lending institutions want to see some consistency. So usually a good year, the longer the better, especially if the payments are current. A few trade lines. So a trade line would be, it's like a lending relationship between yourself and the lender, and it will appear on your credit report. So instead of just seeing one thing, they'd like to see a couple, right? So instead of just seeing one credit card that you're paying on, not that you want to get into more debt. You definitely, I don't want to, that's sometimes a missed discussion right there. But like a car loan or a credit card or a secured line of credit or a small store you like to shop at every once in a while and use it and pay it and use it and pay it. And we'll give you those suggestions as well. But that kind of helps to have more than just one or two items on the report. They usually like to see 2 or 3 different items over time. Even if it's been paid, it can usually count as a trade line. It may not count if it's closed. And it also may, it just depends. So they like to see that. And then of course we want to see on-time payments. And not, even though credit is good, they don't want to see big balances. They don't want to see anything too close to your limit because that might mean hindrance of repayment, right? So it's such a fine line. And I mean, some of this I bet you've heard before, but piecing it all together might be a different story, right? So on-time payments, and I'm going to go over that with you too. If there's something on your credit report that's inaccurate, again, we talked about that a little bit, but you have the absolute right to dispute that. So with the way that you can dispute it, I should update this, but it's still kind of similar. But you have the right to dispute it. You can go online now. And this kind of says the same thing, but like when it says write to the credit reporting agency, I mean, technically you're still writing to them. It's just in a text format. Like, I am disputing this debt because it is not mine. The balance is inaccurate, and any kind of data that you can upload to provide that. So maybe it would be a utility bill with a current address on it, or the fact that you're not the junior, you're the senior, or vice versa. So those kind of things you can report. Even if it's and you want to dispute something in the inquiry section, you can also do that. And then you can include any proof, receipts, anything like that. This is just a sample dispute letter. This is more like for mailing purposes, but you can always use something like this in a text format. It just explains what I just said, like why you're disputing it. But the process here is still the same. I disputed something on my credit report, and within an hour I got an email, within a minute I got a confirmation email that it's been received and they're working on it. And then it was something I just overlooked. And then once they clarified that, I understood. But these things are typically resolved way quicker, probably within a 30-day period. If they have to call or verify or update, things like that. But it must start within a 30-day period. So when you get that confirmation email, that's keep those in a certain spot so you can kind of organize those. And then they also must notify you if there's been any changes made. That would probably also be that will be in an email format as well. I see, that might say, I see, that this balance is inaccurate, and kind of going from there. Report any changes to any other reporting agencies and give you a free copy upon your request of a credit report. Any questions in that section? Nothing? Okay. All right. All right. So let's, ooh, I see something in the chat. You want me to check it, or you want to?
I got it. Okay, so Equifax had inverted some numbers in my social security number, and I disputed that about a year ago. Can I still request the free credit report?
Yes, you should be able to. Absolutely. I would try. And if for some reason there's an issue, I would go back to that initial dispute or start a new dispute. That's interesting. I'm fortunate, but gosh, I've never heard of that, but I'm sure it happens. I see another.
Nope, they're just commenting. Said, thanks, I didn't know that at the time.
All right. Thank you for that. All right. So understanding your credit score. We trickled a few hints in here. So let's see if they can come together in this. So scores are used as a way to evaluate your credit. They typically range between 300 to 850. And I'm going to read this text directly for you because they're generated, because it sounds so nice, by comparing consumer reports to a statistical model. Okay, so they change, things can kind of update and go up and down. I'm sure you've noticed that, but they're supposed to predict if you're going to repay that debt in a fair manner, in an unbiased fashion. Okay, so there's different views. So this can get layered, but we're going to keep it real basic here. So each creditor has their own opinion of credit. Mortgage lender might want it to look one way. A car auto lender might need it to look another. Credit card companies, they all have their different views, and they're tailored to specific lending criteria. So I think I put this in there earlier, right? So there's a FICO score and there's a Vantage score. So they're both scoring models. FICO's the original. FICO's the one a bank's going to look at. And there's even different versions of your FICO, right? They update it all the time. There could be one specifically for mortgages. There could be one specifically for auto lending. There could be version 9, version 10, right? So they change. So this is the one that you're not going to see when you're using Credit Karma or something. Not that Credit Karma is bad. Like I hear it's wrong. It's not wrong. It's just, you know what it is? It's a Vantage score. See this one down here? Vantage scores, you can see they have some of the same data. Percentages are a little bit different. That's all. And you're not going to get all the credit reporting agencies. I think it's 2 out of 3, right? But this is something to kind of think about too. So the main components, right, of either a FICO or a credit or a Vantage rather, is a payment history. You can see 32 to 35. One thing, I know the percentages are different, but one thing you can see is that's the biggest thing. So if you're really looking to up that score or yeah, that's what you're looking to do, right? Really manage that credit score and make it the best it can possibly be. The absolute utmost importance is paying the debts on time. Done. I mean, we want to make sure that those debts are paid. We want to make sure, even though like things like, and I don't know if I clarified this, but like things like rents and utilities, things like that do not appear on our credit report, only if they're delinquent in most circumstances. So they don't technically help us build our credit report or score. But in the same note, if they go delinquent, they'll get reported. So we want to make sure that those are all maintained. And we also like somewhere to live, right? And some heat. So we want to make sure those are maintained. But to bring it back, when we have any kind of debt, so a car loan, credit card, things like that, we want to make sure they're paid on time. We know that, right? Life gets in the way sometimes. But if it starts to go more than 30 days delinquent, it's going to hit our report. And because it's the biggest section of our credit scoring determination, you can lose like 100 points in 1 month if we're behind. So if a business is something you're looking to start, or you've already started and you're looking to borrow, you've got to keep those payments current. It's the best of our ability. Amount owed, utilization. It's the same meaning when it comes to these two charts. See, they have the same color. It just means, we got 23% here, 30% here. You know what that means? Like, how much debt do I owe compared to my limit? So student loans don't give you limits, right? Car loans aren't going to give you limits. So that's not considered in this little square. The current, you got to make sure those payments are paid, and how much you're paying might be considered in your affordability part. Remember in the first section we did, and we said the 4 C's of credit, and there's character, which is how well you pay, but remember that capacity one? If we're paying out a lot of money toward our debt, our score might be fine, but it might be challenging to get approved for loans, because if we have a big car loan or a big student loan, I mean, and it happens, that payment's consumed, that money's consumed. So it doesn't mean you're not going to get approved, but your credit will still stay good. I don't know if I just talked in a circle or not, but when it comes to this little section here, this is just, you know what this is? Things with lines of credit, credit cards, an overdraft, things like that. We don't want the balance to get, or we don't want the balance to get close to that limit, because if it gets too close to the limit, score is going to drop. Sorry, I just did that noise and it's being recorded, but the score is going to drop because you're consuming more of it, right? So that's the second biggest section here that's weighed. So for people who are behind and they're at their credit limits, they're going to see a significant reduction in their score. Nothing that can't be resolved. That's why agencies like ours exist. It happens sometimes. But I just want to kind of point that out. If we're looking at our next endeavor, those 2 factors are going to help you out a lot by maintaining those. So the type and the balances, again, different words, same meaning when it comes to this. This means like, what kind of credit do I have? So there is basically, there's 2 types of credit. I'm kind of trying to go back in my brain. There's revolving and there's installment. Revolving basically means credit cards, things that change when your monthly payment changes because you can use it and pay it off or use it again and pay it down. Installment is, I bet you know, we know what that is, right? That's things that stay the same every month that we can't, it's like a closed-ended debt. That's our car loans, that's our mortgages, that's our student loans, things like that. So it's not that we want more debt. Some people will go out and start opening up a bunch of credit just to, build it. But it's just that if you have that different type and the lender's looking at your report, they're going to feel a little more comfortable letting you borrow that money. That's all. Because they say, oh, look, well, you paid this car loan, you paid a credit card, you're good. And then we have length. Look, it's the same word, little blue section, 13 to 15%. Length means how long you've been using credit. Remember back a long time ago, we talked about how long, about a good year. And the longer you have been using credit with better payment history, your score is going to just rise up. I know sometimes people think that, no, the older you get, if you have those same debts and you're paying things on time, your score just naturally will increase. 15 to 10%. Recent credit and new credit, that is inquiries. So too many inquiries can reduce your score. So that's something to be considerate of as well. And then available credit is only on this Vantage, but it is on this one. It's just under this. We just don't want to get too close to those limits. Once again, the more available credit we have, the better. So just to kind of recap on these charts, you ready? Things that make it go down. Not enough history, too much unsecured debt, which is credit card debt, too close to our limit, too many applications or inquiries, especially in a short period of time, late payments, more than 30 days, and things that go to collections, judgments, things that go legal, right? And we got to manage those. A bankruptcy will lower our credit score. It's a legal process to eliminate debt. Repossession, I didn't talk about that, but it will lower our score. It's going to lower our score because typically if they're going to repossess a vehicle, that's usually what it is. We're already behind on it. But then once it goes to the repossession, it'll go a bit lower. Charge off, so that means it went to collections. Poor mix of credit, that'll make it go a little bit lower as well. So that's that, remember that type. So like credit and car loan and revolving and installment. Things that make it go up, the opposite of everything I just said. This is really what we want to do though. Paying bills on time, little to no unsecured debts, low balances compared to the credit limit, a long credit history, a few recent credit applications, a good mix of credit type, right? So those are all the things. Now this font is different, so it's going to drive me nuts, but recommended actions. So what would we tell you is if you're looking to get on track, we're going to tell you to make sure things are paid on time, right? Number one. Number two, we're going to say keep your credit card balances less than 30% of their limit, right? Even if it's on a single one, we're just going to say like keep the balances less than 30% of their limit, period. So if you got a Kohl's card, I always use Kohl's as an example. So if you have $1,000 limit on Kohl's, you want to keep your balance less than 30%, that's $300 or less, right? And pay it on time. So if we have some credit or debt, which we do, I think everybody's faced that here or there. But if we have some debt we're trying to resolve or to pay, we want to try to pay it down, as quick as we can, because it's just going to give us less interest we're paying, but our score is going to go up. I don't know if anybody's ever done that analysis on their credit scoring model, like when they're looking at Credit Karma or one of those websites, like if you pay off a credit card, what it does, right? So it does make your score drop. So just a few things to think about, when it comes to making some actions. Excuse me. Keep older accounts open and avoid opening too many new ones, because that's that history. If we start closing them down, and I'm sure you've heard this, but let's confirm it here. If you start closing down credit cards, your score is going to drop because it's a lot of movement, but you're not allowing yourself to build that history with creditors. So that's why we have to be careful when we're like opening credit to make sure it's something we really want to utilize, right? Only apply for credit when needed. Shop around within a short span of time. So this, and I need to confirm the time frame. So I'm just going to say the lowest time frame to be safe. So if I'm applying for, and I don't know if this pertains to business credit. I don't know. I can find out, but I know for mortgages and I know for car loans, if you're trying to shop around to get the best rate, there's a 2-week window where you can It could even be a 45-day window. That's what I'm not sure of. So I'm just going to pretend it's a 14-day window where you can apply for different mortgages or different car loans. And even if I apply for 5 different loans to see who would get me the best rate or who would approve me, it's only going to count as one inquiry, because you shouldn't be penalized because you're trying to educate yourself about the different opportunities, right? But it's not the same with credit cards. There is no opportunity, well, there's opportunities, but it's not the same with credit cards. We don't want to open up a bunch of credit cards or apply for a bunch too soon. That can significantly drop your score. We only want to do it if we're looking to build credit, if it's something that is going to help us, but we want to be careful with it. All right. But if you're trying to shop around for a mortgage or car loan, it doesn't necessarily fall under those same rules. Any questions on that section?
No questions.
Okay. Business and credit basics. So these are just a few recommendations that we're going to make or just talk about when it comes to business and credit. This is just general knowledge, okay? And then this, could be covered in a session, and there's a lot of resources. But if you're looking to build your business credit, when you're looking to figure out what entity you're going to use, not that I can tell you, because that's not something I can specialize in, but do your research. If it's just, if it's incorporated, if it's a DBA, if it's an LLC, when you're taking all that into consideration with how much credit you might need. So that's just a quick recommendation we're going to make. Another thing, and I'm sure the library will give you this information, you get your federal, why isn't the federal, it should be capitalized, employer identification number, right? So here's it's a free service you can utilize. If you're just looking to start, you may already be past this in a website. Open business bank accounts in your legal business name, research banks or credit unions that will suit your needs. It's a good way to build a future lending relationship. That I kind of think we mentioned that. It doesn't mean you have to borrow right away or get over your head in credit or debts, but those are just some things that we talked about personal credit and the importance of that, but these are other things that just might complement it, especially if you just educate yourself about it. Set up a dedicated business phone line in your business name, make sure it's listed, have your numbers out there. It might just be a cell phone, something, just so that it's legitimate, with your website, things like that. If you open up a business credit card, or a line of credit, manage it responsibly. So again, that's beyond. So of course we want to do that, because then they're going to start looking at that in the future, right? Versus just your personal credit. I don't want to get away from our focus, but I did want to put that out there. And then if we do use vendors, if you're using any, vendors and you're on a repayment system with them, that could also be another resource. And we're focusing on personal credit, but those kind of things could also help build credit for future purposes. Now this one, I almost took this one out because I know someone's going to ask a question, because Chad, my supervisor, we're looking at this. Check your business credit report regularly to verify that the information is accurate and up to date. So this is just improving, and someone's going to say, where do you check your credit report for that? And I didn't have a site in here because I'm not 100% positive. I know that we can get you connected or find a resource. I think it would be like a DUNS report, but once you start using credit, you'll have a better indication. It's separate from your personal credit report, but that's something for the future. And then establish business credit with companies that report trades. So those are, again, it's stepping away from our focus a little bit, because our focus is more on personal credit, which I think we really covered, but just a few tips. And then we would say, keep yourself educated. Successful business owners continuously educate themselves about opportunities that are available, about education that's available, joining different networking groups, or, even what you're doing right now, you're educating yourself and you're connecting yourself. Connect with a small business administration to see, there's SCORE. There's so many different things out there that can help you. And of course, your library. So you have I think that our library here at Central, and it's not because I just love the people that work there, but it's amazing. And you probably agree, obviously you've been there, but they have a ton of different resources able to help you. I know there's more that are hopefully, available, but here's their website, their phone number, their address. I probably don't even need to mention this, but I'm going to. And I put this in every workshop we do because it's such a resource we have here at Central to help business owners get connected to different resources. I think I said resources too many times. So if people do need to get connected to our help when it comes to the personal credits, you can reach out to us. We're here. Most of our counseling is being done virtually right now, whether it's a Zoom session or a phone session. Monday through Thursday from 8 to 8 is when we do appointments. And then Fridays, we also do appointments from 8 a.m. until 5 p.m. So we're committed to providing guidance to help people achieve that peace of mind. Sessions are booked for about an hour. And we look at your goals, we look at your budget, we look at your debt, help you develop a plan. There's different types of counseling too. So first of all, it's affordable. You're not going to pay for a counseling session. Okay, I just want to put that out there. It's free to meet with someone. There are some fees with some of the programs and services that we offer depending on your need, but just to kind of get an overview of where you stand in a one-on-one session, there is not, it's individualized, everything's confidential, it's comforting, motivating. We offer budget and credit counseling. So that's like where we look at your income, expenses, your debts. And a lot of people start here, I'll tell you that are looking to either, have a goal of opening a business or broadening their business, or currently owning one that might need some organization with their own personal finances. That's very, very common where people come in. Debt management programs. So that would be a program if someone is a bit overwhelmed with their credit card debt, or not even just credit card debt, just maybe it could be collection accounts, medical accounts, and they just need support in condensing that into one payment at a lower interest rate and paid off within 3 to 5 years. That's a very, very, very helpful program to help people become debt-free and pay off those unsecured style debts. We offer first-time home buyer education for those of us looking to purchase their first home, as well as foreclosure prevention counseling. That's a big thing that I want to kind of put out there too, because I know everyone's in a different situation, but when it comes to keeping our mortgage, there are lots of options to help us try to sustain those payments, especially now. There's probably been more options than ever before in programs, especially for us in New York State here. So if someone is facing that, or someone who's facing that, many people do lose their home because of the fear of reaching out, that they're just gonna, not be turned down or be turned down. So foreclosure prevention is something we do, and we're very proud to be able to offer that to help people understand their options, stay up to date, understand their resources, so they can either try to keep the home that they're in and become current on that loan, or figure out what other options are available if they don't want to be in that home. So I just want to put that out there because it's a big thing right now. We offer reverse mortgage counseling. So reverse mortgages are a product that individuals over the age of 62 might look into, but they must know what to do. There's a lot of layers to it. So in order to even move forward with that, a session, an educational session, one-on-one must be completed prior to just obtaining a reverse mortgage. Same idea with a bankruptcy. So prior to filing bankruptcy, there's some online education and courses that are required to take in order to move forward. And then one thing, this is my last big slide, is financial empowerment. Oh my gosh, I should have put this first, but this is huge. This is a huge resource. And we provide free one-on-one financial counseling as a public service, whether someone's looking to build their savings, banking, debt, credit, but it's all in line with personal goals. So like I said, a big goal that people have is, starting a business or maintaining a business. So we offer the small business counseling as well as a financial empowerment counseling to sustain whatever it is you need, that ongoing support. And there's their website. And at the end, when we send out the PDF of this, there's also, if it's okay, there's also a link to an evaluation, which will allow you, if you do want to get connected to counseling, you can fill it out appropriately and someone will reach out to you. But if you don't, that's fine too. I mean, maybe the workshop was enough, but I just want to make sure we make it as efficient as possible for people. So here's our information, like us on Facebook, at least subscribe. Check out our Facebook page, our website, call us anytime. We're just happy to be able to educate and partner with such great organizations such as Central Library in our community. So I'll open it up for any other questions.
Okay, we have a couple questions. How How do you figure out whether to apply for the Dun and Bradstreet number because it costs money?
That's, that's why I almost took that line out, because I'm not 100% sure on that. I don't know. I think a bank, more of like a commercial lender might be aware of that. I can look into it and try to find out and see if I can figure that one out. But I'm not 100% on that. That's more after you start to develop credit, prior to just starting out credit. Sorry.
And
I can find out, though.
also, is your counseling exclusively personal, or do you also do business counseling?
So all the counseling that we offer is personal. So it's not necessarily for businesses, but we do have special counseling and special training to counsel individuals who own businesses. It might be more for their personal, it is for their personal side of things, but it helps us to have that understanding of how businesses operate, making sure we're asking the right questions so that we can really dive in to figure out where things stand. I know that there's organizations that do that, though. I think that like the SBA or SCORE, I believe that they might have that kind of resource available for individuals.
I'll have to look into it. Okay. Any more questions? Going once, going twice.
Sorry, I couldn't answer that Dunn's one, but I don't think it's a challenge, but I'm going to look and see. I knew it. I should have took that line out. I should have.
Okay, well, that's the end of our program. I'd like to thank Andrea for speaking with us today. A recording of this presentation will be posted on YouTube on the Rochester Central Library website channel. And we will email all registered participants with a copy of the presentation slides.
All right. Well, thank you guys for attending.